what's some of the areas in which digital technology is really shaping what you're doing?
I'd like to start off. I mean, I think Chuck kind of mentioned it, but in the financial services, data and non-transparency have been very much loved. And it's always been a big group's game. Like whoever was the bigger group had more power and had the select pieces of data, and were almost forced the other side to give you data. And then below that group, there was very much lack of data. And there was very much a world where it was a disadvantaged world if you weren't the top of the top. And I think what's changing is the ability to get this data. In a world where 90% of today's data was created in the last 2 years, there's a lot more data about people. And who are these people? And what do they do? And how can we just know them a little better?
We deal with high net worth families. And you have to think about things in core and satellite. And you get your core, because the robo-advisors are great at giving you market returns. And what they do is they blend the asset classes to dampen volatility, and you get some portfolio diversification. We look at and ETFs also are not perfect, right? So you need to know the liquidity in ETFs, who's the backer. The thing ETFs haven't gone through is they haven't gone through a crisis where they were big. ETFs are now $3 trillion. They're getting there. They're the same size as the hedge funds. Hedge funds have been around since the 40s. So the ETF industry is growing very rapidly. There's an awful lot of weak sponsors out there. So you need to. Someone still needs to do the homework. I think the robo-advisors are. I think it's really interesting what they're doing.
Yeah, I do.
It's too early.
Yeah.
But it's really powerful. It's really interesting, and it's the way we allocate capital, right? So we use our own models. We have a 19-factor model that we use, and we look at return streams and where exposures are, and we say, okay, so is this a beta play or is it an alpha play? And then you try to split them out, and then it's really hard to find alpha, which is actually what we use Sam's guys for. And a lot of the old alpha providers have become beta providers, and you just pay more for it. So and data is the only way to get to the bottom of it, and make smarter decisions and allocating capital.
If you look in the hedge fund industry in a non-digital world, a lot of people make generally the same, or at least they charge the same fees. And that's counterintuitive to markets. I always used to say that. I said, okay, if you have a Mercedes and it's at the top of the line, and someone says, I'm gonna build a new car, and I'm gonna give you exactly the same price. That just says that's not logical, really. But that's how it is in the hedge fund and the PE industry. Is like you have Danny Ock, or you have Lewis, or you have Magnetar. They deserve those kind of prices. And then the new person comes in and says, I'm going to charge the same thing. And I think in a digital world, that really starts to change. That pricing becomes extremely important, and that people will price their products differently in a world where people can get that access to data much quicker.